Good morning, this is John Piper with the weekend video clip, and it's Saturday the 16th of November. I'm looking here at a daily chart of the Dow. Basically we made this false break there, we've now shot up, broken through here, and we've got that strong resistance line, multi-year trend line around the 16,000 level. We could be seeing some kind of blow off top here. I mean, it's obviously some kind of top because it's unsustainable. I mean, the QE has had no real effect on the economy, which was never really the plan, although it would have been nice, of course. It is helping the bank's balance sheets, but apparently they're still not exactly ideal. But some kind of blow-off is possible at this point, as we're now going into the Xmas period. Expires out the way. In fact, it had really little effect, really. We're a bit of a damp squid this time. And it looks pretty positive, really. Let's have a look at the shorter term. As I was saying in, I think, one of the reports during the week, we've got cases of a third wave here, so 1, 2, 3, another 1, 2 there, building up to it. So, certainly, I mean, if we take these three waves here, they last about a month. So, if we're going to see a final topping process, 4-5-4-5 as it were, then that would take us right into Christmas, in fact, and the New Year, which is where we're obviously headed. No escape from that particular sequence. Depends how far it goes. Really, 16,000 is a key. If we break through there, then the sky could be the limit. So let's look at FTSE now. FTSE still dragging its feet a bit. It's got this decline there, which is still 5 waves, but that looks like a 1. Then we've got an A, B, C, 2. Then we've probably got maybe a 1 of 3 if this is impulsive. So we had this corrective move to there, which I've been talking about, but it's still been very dithery. I mean, we could see a solid move up on Monday, perhaps. Let's have a look. Let me just check what the spread bids are quoting. Okay, I just checked. The last quote was 6,690, so no change at all. Let's have a look at the shorter term action. Well, pretty unimpressive, really, with a sort of appears to be an A, B, C there. 5 waves down there. Not that really means a great deal in this case. Then a possible C wave, another ABC there. Nothing to write home about. I mean, I think a buying spike on Monday would be a buying opportunity. Ideally, it would start below 666, 700 and be pushed up above that level, so you have a clear stop below the level, getting in above the level. I mean, it's fairly low risk. I mean, you may want to use a looser stop if you're feeling that we're definitely going to see a move up. Then and it's a good solid move. Then you can risk a bit more, maybe reduce position size. Better be positioned at a lower price, a lower stake, than to be stopped out at a higher one. I mean, I think my view is we're going up from here. Just the chart of FTSE does not really support that view, but a buying spike would change that. Let's look at the the Nikkei now. Okay, here's the chart from the daily report. 20-year triangle. Peak there, sharp move down, ABC rally, another sharp move down, and it's just dithering around this trade. I mean, ending diagonal maybe, but it's a hell of a long one. It's 20 years long almost now. So this is a key resistance level marked by the peak. So a break through there would be of some significance. So let's go back to the chart we were looking at. So you can see that the market is now putting in an attempt at that level. There's the peak, the line somewhere like that. It's quite a slow line, but I think 16,000 is probably the most important level, given we've also got this selling spike up there. Not the greatest pattern, but we have perhaps got a impulsive action there, corrective there, then a 1, 2, 1, 2, now maybe a 3. So again, we could see some startling action on the Nikkei. We've been long since January on the Nikkei. Trade that's gone particularly well this year. Right, gold. Right, gold's still doing around a bit. Doesn't look particularly impressive. We're still hovering around 1300, which is there. I mean, it's looking corrective. I mean, I think we might well see another blip up, but it's not looking terribly encouraging. Pound dollar. Pound dollar looks good at the moment. Rather similar pattern to FTSE actually, in the much shorter term on FTSE. But these 3 lows there. 2 peaks there, so these arrows keep jumping in for some reason. So for now, unless we break below this significantly, I think we're going to go higher here and at least retest that again. Pound euro broke through this strong resistance level about 1.2. Okay, it was a failed break, came down, not hugely, but we're now retesting 1.2. Could go either way at this point. I've got order in to buy some euros at around the 195 level, but of course I've got a spread to pay, so it has to go a bit harder than that for me to get that price. I need some cash, so in euros, so it's not a trade as such. Just want to get a good price on the transaction. I still think that the pound is liable to disappoint, but right now the chart patterns, especially on pound dollar, look good. This one we require some resolution. Right, on NASGAP, which is a system I know some of you already have, but it's had a great week. There were obviously 5 days in a week. NASGAP traded on 4 of those days. Everyone was a winner, and there is a short video clip which I've put a link to in the report itself. Just going through that, which you might be interested in. If you're interested in the system, then drop me an email, please. And that's all for this weekend. If you found it interesting and useful, I'll be back with the report on Tuesday morning, plus the special reports as required on Monday. Thanks again, have a great weekend, and bye for now.